This is Commodity Red. I'm Tony St. James here on a Wednesday, and our special guest is Brian Hoobs. Brian is president, Midwest Market Solutions. And Brian, what an interesting day of trade on Wednesday. We had a lot of information out there, not as far as, I don't know that we had any report that came out or any one thing that just took the market. Well, okay, maybe it was tariff talk. But corn lower, soybeans lower, mixed trade in wheat with Kansas City kind of popping higher. Cotton market was higher. We saw cattle and hogs moving higher, and then just ups and downs in the outside market. So what really caught your attention on Wednesday?
Well, I think, you look at the overall news today, it's largely negative for corn and soybeans. Rain in the forecast for northern Brazil, where it's been very dry, and that dryness has allowed them to move to above normal pace for corn and for soybean harvest of their first crop of corn. And so now that they're getting a vast majority of their crop harvested, they would like some rain, some moisture, because the second corn crop is going in, and that's the biggest crop, the safrinha crop, 80% of what they grow. They badly need some moisture, and that's in the forecast. I think that's what really pushed the corn market lower today, despite decent export news that we saw on Monday. The ethanol report out, the EIA report, showed a small decline in production with ethanol stocks increasing. Maybe a sign that demand is starting to slow a little bit with those supplies increasing. And those levels now are starting to approach some record type levels as far as stocks of ethanol. So disappointment, a little bearish news from that respect. And, of course, tariff talk, always in the background, always a little bit negative, something for the trade to focus on until we hear some good news that we have new trade agreements that I think is going to continue to put some pressure against our corn and soybean markets. Now, wheat was under pressure. Maybe the Stats Canada news this morning weighed on us, but I think we did look at midday weather models that don't have a lot of rain in that forecast for the winter wheat plains crops, and we started to rally off of that news a little bit. We are seeing big dormancy here in the winter wheat plains areas. Would love to see some moisture, and it's really not in the cards in a meaningful way.
I'm also looking, if we're going to talk about tariffs, some of the outside markets that seem to have been moved just by tariffs in Canada. One of those markets has been, I think, the oat market, which is up over 11% here in 2025. Had a great month last month. And then the lumber market, talking softwood lumber now, which is up over 17% this year. And now 4 consecutive closes higher for the lumber market. So, again, it's more than just the commodities we normally talk about. It's hitting some of these outside commodities as well.
Right. It's going to continue to hit all these commodities. Everything we touch is considered a commodity, and it's going to affect everything, including gas prices for our cars, prices for natural gas and to heat our homes, to cool our homes this summer. Basically everything is going to be affected one way or another by supply and demand, and that demand includes reduced demand possibly because of the tariff situation.
Now, I will throw this in before we go to a break. One story that I've heard, and this is, I guess, the first story that I've heard where an aluminum CEO for Century Aluminum on CNBC earlier in the day talking about building a new smelter. And again, I'm way out over my skis on this, but says it will double U.S. production. There's currently a 4 million ton shortfall in aluminum just to meet the demand in the U.S. And apparently we've been importing about $58 billion in aluminum and steel and iron. And he says the tariffs are what's giving them the opportunity to reinvest. So it's the only one I've heard so far, but there is another side of that coin. Let's take a break. We'll come back in a moment And we'll talk livestock futures with Brian Hoops. This is Commodity Wrap. This is Commodity Wrap. We're talking today with Brian Hoops. Brian is president, Midwest Market Solutions. And Brian, we spent some time on the row crops, some outside markets. Maybe let's focus on three markets that definitely moved higher on Wednesday. Live cattle futures higher, feeder cattle higher, and the hog market, with the exception of the April contract, higher as well. What's happening with the proteins?
Well, yeah, we are seeing some nice movements in the live cattle, feeder cattle. We're now seeing some contract highs or all-time highs made in the live cattle and the feeder market. So very, very good. Great to see that type of markets moving higher. The cash trade is what's going to drive us, of course, in the cattle market. And we're looking at probably higher cash trade this week. Last week was stronger. This week we were called steady to a little bit higher. And those April futures dialing in trade 200 to 201 at least this week. The bids are pretty non-existent so far, but we're seeing asking prices in the south at 202, nothing really to speak of in the north, and that those asking prices should translate to some higher money anyway. We're going to be looking for probably, as I said, 200 to 201 being traded in the Southern Plains, and everything is all said and done. And that's what really is driving our futures market higher here. Cutout values responding positively. I think that's a sign of improving demand. That's possibly because of the cheaper dollar and the fact that our prices have fallen to a level that is starting to stimulate that demand. So, it's something that I think a lot of the trade had expected we would move back higher because those supplies remain so tight, so cheap.
Now, we did see slaughter kind of tick up, if I recall, last week, and it's really the first kind of turnaround we've seen after lower slaughter numbers week after week. It was as if the packers were starting to slow things down in an effort to not have to go out and buy so many cattle. But you're also looking at the start of the grilling season, unofficial start right around the corner, and obviously weather improving in areas. This has got to be a conundrum, doesn't it?
Yeah, we expect demand to improve as we go into the summer grilling season, at least consumer demand anyway. Hopefully we find some prices that are on sale, or consumers have been maybe stocking up now at these lower price levels. But it's going to be a situation, I think, where we have pullbacks in the market like we're seeing in the stock market, but also some very bullish marketplace, because just the supply just cannot change quickly enough. You can change the demand, and we've seen that change, over periods of weeks where prices are high, consumers back off, now they drop off sharply, they're starting to improve again. That can change, but that supply issue, that's going to be with us for several months, and maybe more than several months, maybe more than like a year even.
So just looking at the year alone, 2025, and I know we're only in the third month, we haven't even wrapped up the quarter yet, but live cattle on the year 2025 up 3%. Feeder cattle contracts futures up over 6%, hogs up over 6.4%. But for those gains, we've actually seen similar losses from the equities, Dow, NASDAQ, S&P, all in the red for this year, for the month, and have been in the red for this entire week. As we kind of wrap up here, looking at the equities that did kind of finish in mixed territory, thoughts on that?
I don't know that we've have a bottom in the stock market yet. This is about the time of year where we normally do. Right about this time frame in March is when our lows are in place and we start to rally. So maybe we're getting close. I'm looking for some sort of a reversal pattern. We don't always have to have it, but on the S&P charts, many times we do, where we make new lows, kind of wash out a bunch of stops, and then close higher. If we can have that type of action,
with confirmation the next day of higher prices yet, that should be a sign in the market. But I think we're getting close, especially from a seasonal standpoint.
All right, Brian, if we want to visit with you one-on-one, how do we find Brian Hoops and Midwest Market Solutions?
Well, I can give you our website address. We can go to look at all of our office locations around the Midwest, MidwestMarketSolutions.com. And if you want to call me directly, the number is 417-501-5132.